Have you ever wondered how your Social Security benefits are calculated? It all starts with something called your Social Security earnings record. This record is essentially a detailed history of your annual earnings throughout your working life, as reported to the Social Security Administration. Every year, your employer sends your income information to the government, and it gets added to your personal file. This record is more than just a list of numbers. It's the foundation for determining your future Social Security benefits. In this video, we'll break down what your earnings record is, why it matters, and how you can make sure it's accurate. Your Social Security earnings record is a chronological list of your reported wages and self-employment income. The Social Security Administration uses this record to track how much you've earned each year. It's not just a simple summary. It includes every year you've worked and paid Social Security taxes. This record is crucial because it forms the basis for calculating your retirement, disability, and survivor benefits. If there are errors or missing years, your benefits could be lower than you deserve. That's why understanding and checking your earnings record is so important for your financial future. Each year, your employer reports your earnings to the Social Security Administration using your Social Security number. If you're self-employed, you report your income when you file your taxes. The SSA then compiles this information into your personal earnings record. This process happens automatically, but it relies on accurate reporting from both you and your employer. Mistakes can happen, such as incorrect Social Security numbers or missed income, which is why it's important to review your record regularly. Keeping your information up to date ensures your future benefits are calculated correctly. Your earnings record includes all the income you've earned that was subject to Social Security taxes. This covers wages from jobs, self-employment income, and sometimes even certain types of government or military pay. The record lists your earnings year by year, showing exactly how much you made and paid into the system. It does not include income that wasn't taxed for Social Security, such as certain pensions or investment income. Understanding what's included helps you spot any gaps or errors that could affect your benefits later on. Accuracy in your Social Security earnings record is critical. If your record is missing income or contains errors, your future benefits could be reduced. For example, if a year's earnings are missing, the SSA might calculate your benefits as if you didn't work that year, which can lower your average earnings and your monthly benefit amount. That's why it's essential to check your record regularly and correct any mistakes as soon as possible. Even small errors can have a big impact over time. The Social Security Administration uses your earnings record to calculate your benefits. They look at your highest 35 years of earnings, adjust them for inflation, and use a specific formula to determine your monthly benefit. If you have fewer than 35 years of work, zeros are added for the missing years, which can lower your average. This calculation method means that every year of earnings counts, and missing or incorrect data can significantly affect your future payments. Only income that is subject to Social Security taxes gets included in your earnings record. This means that if you have a job where Social Security taxes aren't withheld, or if you're paid under the table, those earnings won't count toward your benefits. It's important to make sure that all your taxable income is properly reported so you get credit for every dollar you earn. This ensures your benefits reflect your true work history. You can access your Social Security earnings record online by creating a My Social Security account at the official SSA website. Once logged in, you'll be able to view your complete earnings history, check for errors, and download your annual Social Security statement. This tool makes it easy to stay on top of your record and spot any discrepancies early. It's a good idea to check your record at least once a year. Your Social Security statement provides a summary of your earnings record, estimated benefits, and other important information. It lists your tax Social Security earnings year by year and projects your future benefits based on your current work history. Reviewing this statement helps you understand where you stand and whether your record is accurate. If you notice any missing or incorrect information, it's important to take action right away. Mistakes can happen in your earnings record for a variety of reasons. Common errors include missing years, incorrect earnings amounts, or even a wrong Social Security number. These mistakes can occur if your employer makes a reporting error or if your personal information changes and isn't updated. It's important to review your record for these issues as they can have a lasting impact on your benefits. If you find an error in your earnings record, don't panic. The Social Security Administration has a process for correcting mistakes. You'll need to provide documentation, such as W-2 forms, pay stubs, or tax returns, to prove your correct earnings. Contact the SSA as soon as you notice a problem, and follow their instructions for submitting your evidence. The sooner you address errors, the easier they are to fix. Missing earnings in your record can have a significant impact on your Social Security benefits. If a year's income isn't included, the SSA may calculate your benefits as if you didn't work that year, which can lower your average earnings and reduce your monthly benefit. Over time, even a single missing year can add up to thousands of dollars in lost benefits. That's why it's so important to make sure your record is complete and accurate. Checking your earnings record early and often is the best way to prevent problems down the road. The sooner you catch an error, the easier it is to fix. If you wait until you're ready to retire, it may be more difficult to find the necessary documentation or correct mistakes. Make it a habit to review your record every year so you can be confident your benefits will be accurate when you need them. Employers are required to report your earnings to the Social Security Administration every year. They do this by submitting W-2 forms, which include your total wages and the amount of Social Security tax withheld. This information is matched to your Social Security number and added to your earnings record. If your employer makes a mistake or fails to report your income, it can cause problems with your record. So it's important to keep your own records as well. If you're self-employed, you're responsible for reporting your own earnings to the Social Security Administration. This is done through your annual tax return, where you report your net self-employment income and pay the required Social Security taxes. It's important to keep accurate records and report all your income, as failing to do so can result in missing years or lower benefits. Self-employed individuals should pay extra attention to their earnings record. Military service can also count toward your Social Security earnings record. The government reports your military pay to the SSA, and in some cases, you may receive extra credits for certain periods of service. If you've served in the military, it's important to check that your earnings record includes your military wages. These credits can boost your future benefits and ensure you get the full amount you're entitled to. Some government jobs are not covered by Social Security, especially if you participate in a separate pension plan. In these cases, your earnings from those jobs may not appear on your Social Security earnings record. If you've worked in both covered and non-covered positions, it's important to understand how this affects your benefits. Your record should accurately reflect all your covered earnings to ensure your benefits are calculated correctly. Each year, there's a limit to how much of your income is subject to Social Security taxes. This is called the maximum taxable earnings limit. Any income you earn above this limit isn't taxed for Social Security and won't appear in your earnings record. Understanding this limit helps you know how much of your income counts toward your future benefits and why your record may not show all your earnings if you have a high income. Your Social Security retirement benefits are directly tied to your earnings record. The more you earn and report, the higher your potential benefit. The SSA calculates your benefit based on your average indexed monthly earnings. So every year of high earnings can boost your future payments. That's why it's important to maximize your earnings and make sure they're properly reported throughout your career. Your earnings record doesn't just affect your retirement benefits. It's also used to determine your eligibility and payment amounts for Social Security, disability, and survivor benefits. If you become disabled or pass away, your family's benefits will be based on your reported earnings. That's why it's important to keep your record accurate, not just for yourself, but for your loved ones as well. When calculating your Social Security benefits, the SSA adjusts your past earnings for inflation. This process is called indexing. Indexed earnings ensure that your benefits reflect the true value of your work over time, even as the cost of living changes. The SSA uses national wage data to make these adjustments, so your benefits keep pace with economic growth. Spotting discrepancies in your earnings record is easier than you might think. Compare your Social Security statement with your own records, such as W-2 seconds, pay stubs, and tax returns. Look for any years with missing or unusually low earnings. If something doesn't match, gather your documentation and contact the SSA to resolve the issue. Regular checks help you catch problems before they affect your benefits. Maintaining your own records is one of the best ways to ensure your Social Security earnings record is accurate. Keep copies of your W-2 forms, pay stubs, and tax returns for at least as long as you're working. These documents can help you verify your earnings and provide proof if you ever need to correct an error with the SSA. Good record keeping is a smart financial habit. It's a good idea to keep your earnings records and supporting documents for at least as long as you're working, and ideally for several years after you retire. The SSA recommends keeping your tax records for at least 3 years, but holding on to them longer can help if you ever need to correct an old error. Digital copies are a convenient way to store your documents safely. If you discover an error in your earnings record years after it happened, you can still request a correction. The SSA may ask for documentation, so having old records is important. While it's easier to fix recent errors, the SSA can correct older mistakes if you have proof. Don't hesitate to reach out, even if the error is from many years ago. If you change your name due to marriage, divorce, or any other reason, it's important to update your information with the Social Security Administration. Failing to do so can cause your earnings to be misreported or not credited to your record. Always make sure your name and Social Security number match on all employment and tax documents to avoid problems. Your Social Security number is the key identifier for your earnings record. If your employer reports your earnings under the wrong number, those wages may not be credited to your record. Always double check that your employer has your correct Social Security number on file, especially if you start a new job or change your name. The Internal Revenue Service, IRS, plays a role in your Social Security earnings record by processing your tax returns and forwarding your income information to the SSA. If there are discrepancies between your tax return and your employer's reports, it can cause issues with your record. That's why it's important to file your taxes accurately and on time. If you worked in another country, your foreign earnings generally won't appear on your U.S. Social Security earnings record. However, the U.S. has agreements with some countries that allow you to combine work credits for benefit eligibility. If you've worked abroad, check if your country has a totalization agreement with the U.S. and how it affects your record. To qualify for Social Security benefits, you need to earn a certain number of credits. Credits are based on your annual earnings, and you can earn up to 4 credits per year. The amount needed for a credit changes each year. Your earnings record tracks your credits, and you generally need 40 credits to qualify for retirement benefits. Understanding credits helps you plan your work and retirement. Each year, you earn 1 Social Security credit for a set amount of income, up to 4 credits per year. The dollar amount required for a credit changes annually with inflation. Your earnings record keeps track of how many credits you've earned over your lifetime. Once you reach 40 credits, you're eligible for retirement benefits, but more credits can help with disability and survivor benefits. If you choose to retire early, your Social Security benefits will be based on your earnings record up to that point. Retiring before reaching 35 years of work means zeros will be added for missing years, which can lower your average earnings and reduce your benefit. Planning your retirement with your earnings record in mind can help you maximize your payments. Delaying your retirement can increase your Social Security benefits. By working longer, you can replace lower earning years with higher ones, raising your average indexed monthly earnings. Your earnings record will reflect these additional years, and your benefit will grow with each year you delay, claiming up to age 70. Your spouse may be eligible for Social Security benefits based on your earnings record. If your spouse has little or no work history, they can receive up to half of your full retirement benefit. Keeping your record accurate ensures your spouse gets the correct amount. Spousal benefits are an important part of Social Security planning for many families. If you're divorced, your ex-spouse may still be eligible for Social Security benefits based on your earnings record, provided the marriage lasted at least 10 years. These benefits do not affect your own payments. Ensuring your record is accurate helps both you and your ex-spouse receive the correct benefits. If you pass away, your surviving spouse and children may be eligible for survivor benefits based on your earnings record. The amount they receive depends on your reported earnings and work history. Keeping your record accurate ensures your family is protected and receives the benefits they're entitled to. If you become disabled, your eligibility for Social Security disability benefits is based on your earnings record. The SSA looks at your recent work history and total credits to determine if you qualify. Accurate reporting ensures you get the support you need if you're unable to work due to a disability. Your Social Security earnings record also affects your eligibility for Medicare. Generally, if you have at least 40 credits, you qualify for premium-free Medicare Part A at age 65. Your record is the proof the government uses to determine your eligibility, so keeping it accurate is important for your healthcare and retirement. If you have questions or need to correct your earnings record, you can contact the Social Security Administration by phone, online, or in person at your local office. The SSA website provides detailed instructions and forms for reporting errors. Don't hesitate to reach out if you need help. Getting your record right is worth the effort. Protecting your Social Security number is essential to prevent identity, theft, and errors in your earnings record. Never share your number unnecessarily, and be cautious with documents that contain it. If your number is stolen or misused, report it to the SSA and take steps to protect your identity. Safeguarding your number helps keep your earnings record secure. When accessing your Social Security earnings record online, always use secure passwords and enable two-factor authentication if available. Be wary of phishing emails or fake websites that try to steal your information. The SSA will never ask for your password or personal details by email. Staying vigilant online helps protect your sensitive data. Your Social Security earnings record is more than just a list of numbers. It's the key to your financial security in retirement and beyond. By understanding, monitoring, and protecting your record, you can ensure you receive the benefits you've earned. Taking a proactive approach now will pay off for years to come, providing peace of mind for you and your family. Let's recap the most important things to remember about your Social Security earnings record. It tracks your annual earnings, determines your eligibility and benefit amounts, and must be accurate to ensure you get the payments you deserve. Regularly checking your record Keeping good documentation and correcting errors promptly are the best ways to protect your financial future. Your earnings record is your responsibility. Take charge of it today. Don't wait until retirement to check your Social Security earnings record. Take action today by creating an online account, reviewing your statement, and keeping your personal records organized. If you find any errors, address them right away. Being proactive now can save you time and money in the future and help you get the most from your Social Security benefits. Your Social Security earnings record is a powerful tool for securing your financial future. By understanding how it works, staying vigilant for errors, and taking steps to keep it accurate, you can make sure you and your family receive the benefits you've earned. Remember, your record is the foundation of your Social Security benefits. Take care of it, and it will take care of you.